Hello and welcome to Business Incorporated live on Channels Television. Well, the trading day, that's a Tuesday trading day, is moving along just fine, but some markets are hard hit right now. But here's what's coming up in the next 55 minutes. Well, as businesses position for 2025, we get tips on marketing mistakes to avoid. And Tanzanian operators brace for changes to their domestic stock market demands. Plus, some markets get bruised as Trump tariff jitters that roils markets all over the world. It's good to have you join us. I'm Ladi Williams. Let's get a check on what's playing out with most of the markets that we track, starting with commodities. Now, we've seen oil prices, they've climbed. Yeah, oil prices are not bruised today like other markets that we track. $75.16 a barrel. That's what Brent is trading at, up 0.51%. WTI, that's US grade, that's $71.13 a barrel. We see both benchmarks there holding up from the previous sell-off we saw on Monday. All right, let's get a check on metals now. We're seeing the metals market also trying to hold steady at this point with spot gold. That's unchanged, $2,950. We're still seeing some kind of momentum, building. The analyst I spoke to yesterday said that once gold crosses that $3,000 psychological level, things will just keep going up, from there. But we'll see if that plays out. U.S. gold futures, $2,967. On the flip side, up 0.1%. Spot silver looking much better, 0.3%, up $32.45. And platinum stays unchanged, while palladium stays farther from that $1,000 psychological level. All right, to other stories now. The Minister of Finance and the coordinating Minister of the Economy, Mr. Wale Adu, announced on Tuesday that Nigeria and Belgium are set to strengthen economic cooperation to bolster food security. The Director of Information and Public Relations at the Ministry of Finance, as Mr. Mohamed Maga, disclosed this in a statement. And according to the statement, the ministry says that the Belgian ambassador, that's Mr. Pieter Lignit, held a meeting to explore ways to facilitate cooperation in agriculture and food security. We'll definitely be tracking the outcome of that meeting. Well, the European Commission, they've received requests from Nigeria and 23 other non-members of the Organization for Economic Cooperation and Development countries seeking inclusion in the list of nations eligible to import non-hazardous waste from the European Union. Non-hazardous waste, which accounts for 95.6% of solid waste produced in Europe, includes municipal waste such as packaging, clothing, bottles, and plastics, as well as demolition materials like concrete, bricks, stones, and food waste. A statement issued, the request is made in line with the new waste shipments regulation introduced as part of EU's Green Deal and a Circular Economy Action Plan. And the Canton Fair complex seems set for the 137th edition of the Guangzhou, China, as the Deputy Consul General of the Consulate General of the People's Republic of China in Lagos, Jin Myun. He met with members of the Lagos Chamber of Commerce and Industry to ask for the usual collaboration ahead of the event. Take a listen.
To provide 24/7 online services.
The Lagos Chamber of Commerce and Industry has organized this strategic event that's aimed at strengthening trade and investment ties between Nigeria and China. This meeting is particularly for the 137th Canton Fair, which is expected to host both Nigerian and Chinese diplomatic mission, as well as panel discussions on trade facilitation, infrastructure development, and technology transfer.
They have now simplified their visa processes, and that is to assure you that if you start in good time, you're going to get your visa. Okay? But for Nigeria, I think the first thing for us why we need to promote this Canton Fair is because we want to enhance Nigeria-China trade relations. Trade is a global thing, but it's not all trade that are good. There are trades that bring fake products into the country, but the Canton Fair does not promote fake products.
Both countries have plans to maximize the Canton platform.
Chinese and Nigerian enterprises will strengthen exchange, complement each other's advantages, expand trade volumes, and explore new areas of cooperation.
For LCCI, this is in continuation of a long-standing relationship.
We take quite a lot of Nigerians to Canton Fair for many reasons. One, for them to see how advanced China has become in a few years, and to look at the opportunities for businesses between Nigeria and China. Not just to buy not just Nigerians buying Chinese goods, but also buying equipment to set up our factories here.
The fair opens on April 15, 2025 at China Import and Export Fair Complex in Gansu, China.
Features product display.
And the government needs to be more aggressive and efficient in its efforts at collecting and deploying revenue from the country's oil and gas sector. This according to the Managing Director and Chief Executive Officer of Financial Derivatives Company, Mr. Bismarck Rouhani. Speaking earlier on Business Morning today, Mr. Rouhani explained that the move has become necessary in order to block the leakages, which have now become endemic amid looming petrol scarcity caused by the imminent strike threat announced by the Independent Petroleum Marketers of Nigeria. Take a listen.
The government has to be more efficient and aggressive in its collection of revenues. I think that's what the plan is, and that's why the tax reform discussions and bills are being reviewed at this point in time. Not to increase the rates, but actually to increase the efficiency of collection, one. Two, to ensure that what is collected is well deployed and is used efficiently. In other words, blocking leakages. That is easier said than done. The reality is that leakages have become endemic in the Nigerian system. So that's a major responsibility of the administration to see that, one, to talk about blocking leakages, to ensure that it is done, and to show examples of people where there were leakages, and that they should be brought to account and actually prosecuted. That's part of it. But having said that, I heard you talk about the imminent strike and the threat of a strike, but the reality is that in Lagos today, at least on Victoria and Ikoyi, and the upper end of the Lagos metropolis, there's no petrol at all. So it's not just an imminent strike. It looks as if there's already a scarcity, and that has created probably a black market already, which is what we try to avoid, and that is the purpose of the Dangote refinery, to ensure that what is available at the going price. But having said that, we need to understand that at this point in time, the bridging, which is the cost of this thing, if the NNPC is owing the independent market as 100 billion naira and have not paid the past, so their industrial action is probably justified. But at the expense of the people are suffering.
All right, that was Mr. Rouhani earlier today, and we're hearing reports of some scarcity that's on the island. And I don't want to hear about petrol scarcity at this time, but hopefully that ends very soon. But let's get to our first conversation now. In today's fast-paced and ever-evolving marketing landscape, even the smallest misstep can have significant consequences, from outdated strategies to tone-deaf messaging. Marketing mistakes can damage your brand's reputation, alienate your customers, and ultimately impact your bottom line. Well, joining us now to explore, ways to avoid, some of these common mistakes, we have Olajumoke Abiodun, who's the CEO, Market Edge Advisory, and we also have Roland Omoroshemi, is the Director, Market Edge Advisory, and they're both joining me right here in the studio. It's good to have you both.
Thank you so much for having us.
Good afternoon. So,
thank you.
Definitely, it's that time again where, companies have to, set up strategies because, fine, maybe last year you made good revenue, you made good profit, but in the new year, you also like to continue that or maybe outpace, make more money.
Yes.
And you have to, it all depends on how you present yourself, to the customer at this point, and maybe bring in new customers. So, talk to me about the common mistakes, some of these marketers and some of these companies are making, right now.
I mean, it's an amazing topic. I think the first one, which is very critical to a lot of businesses, is the targeting is always too broad. There's this, should I say, scarcity mentality. There's a fear that if I niche down, businesses don't like to hear the word niche because it feels like you are cutting their pie, into a smaller piece, right? So they're like, we need to target as many people as possible. And ironically, that's the problem, is that the more specific you get about who your product is for, even if it seems like you are reducing the market, your market size, you are increasing your likelihood of actually getting those guys to buy. I'll give you an example. There are some luxury brands who are very good at this. You will never see them on a billboard because the people that buy a Rolls Royce, for example, do not make purchasing decisions from billboards. From billboards, right. You will never see a Rolls Royce ad.
Or maybe that's why I don't see them.
Yet, in the rooms where those who buy Rolls Royces roll, the Rolls Royce conversations, happen. Businesses need to narrow down, need to niche down. Who is your product for? The more specific you get to the type of man or woman, to the age, to what they do, what they buy, where they go, the more specific you get, the better your chances of actually increasing revenue.
Right.
So a big problem is being too broad.
Because I see, in my mind, it's like a fishing net. You just throw it. And you try to get it as wide as you can.
And then you get prawns, you get crabs.
Right.
Meanwhile, you're actually fishing for what's a very good fish, tilapia.
Right.
Yeah. Fishermen know where to find tilapia. Go to where you can find tilapia. Don't just throw your net.
Right. All right, Roland, you can break it down more for me now. How do I go about this? Let's just imagine I'm a business now and I'm trying to get, that target, that I'm looking for. Is it about raising the spend, the marketing spend, or there's something more to it?
Well, it actually starts much earlier, at inception. What products are you wanting to get out there? Who do you want to get it for? What problem is it solving for people? So understanding that, and then understanding the journey that your customers go through, from awareness to interest to consideration to purchase to building that loyalty. There's a journey customers go through, and then companies, I don't think, pay that much attention to that journey. And at each touch point within that journey are sentiments that customers have. Understanding those sentiments will enable you really refine how you service your customers. So, and those sentiments come about as a result of either environmental factors or external or internal to the organization. So I'm trying to buy a Nike shoe. It starts out from, you create an awareness for me, someone was wearing it. I saw it during Super Bowl, I inquire about it, and then your marketing team, creating that from the top of the funnel down, you're creating that awareness for me to see it, and me deciding on wanting to buy it. How you nurture me through that process of trying to buy is so important. And understanding those sentiments, those that understand it well are able to keep, real good grasp of their market share and maintain it over time, and then also develop subsequent products to meet that demand over time. Yeah.
And and looking at marketing, is it the kind of skill where we just continue with the old ways, like maybe it's billboards, it's whatever. Does it have that structure that you say, okay, this is where we go to?
Yes.
We go to the back. That's the style.
That's a good
question. Or are you trying to move with trends?
Oh yes, so that's a good question, right? First, I will say no. Do not move with trends. There's always some trendy new channel, some trendy new thing, to do. Oh, there's a new social media channel, TikTok. Let's go to TikTok.
Right.
Meanwhile, your customers, we've said you are targeting too broadly, so you don't know your customers. Your customers may not be on TikTok. The person that buys what you are selling is probably not on TikTok. If you know who they are, then you can tell my customers are men between the ages of 45 and 65. Are they on TikTok? They're not. So talking about the marketing mix.
We see some daddies.
Oh, we see some
on TikTok.
We see
trying
some daddies.
To get on there.
But they don't make purchasing decisions from TikTok.
Right.
That's the thing. So do they make purchasing decisions from TikTok? Maybe not. Do they get entertainment from TikTok? Maybe yes. So talking about the marketing mix, I think there is no outdated channel. Businesses that will succeed need to have a healthy mix of both digital and traditional. They both still have a role to play. When I say traditional, I'm talking about TV, billboards, radio. They are still very relevant. Email marketing is not dead. People say, oh, who reads emails? There is a certain subset, a certain customer type who would only take a decision if email was a part of that journey. Like, Roland said. Usually there are different touch points before a customer makes a decision. It's not the first time I see an ad, usually I buy. So I would have seen a billboard when I was driving. And then I log on to Facebook, I see the same ad. Usually it might take 3 to 4, 5 touch points. Before one day I'm like, I need to buy a pair of shoes. I've been seeing one and then I go there. Right? So it's important that the brand is represented across relevant channels and touch points relevant to that customer type. Because if your targets are teenagers, for example, what are you doing email marketing for?
Right, and that reminds me of something. There's this saying that the phones and the phones are listening.
Yeah,
because I'm talking about chicken now. For some reason, I see ads about chicken. So do you marketers have some kind of thing with the phones?
Yes, the phones listen to you. That's why when you say, hey Siri, Siri is able to answer you.
Right.
Because it was listening in the first place. Because if it wasn't listening, then it wouldn't. So there is personalization. There's a lot of personalization now in the world of digital marketing. The ads you see on your social media are specific to you. Because Facebook, Meta, WhatsApp, all of those channels, they have gathered your conversations around the different touch points and tailored the experience you have to you. The ads I will see if I logged on to Instagram is different from the ads Roland will see. So yes, there is hyper-personalization is the key to efficient marketing or effective marketing.
Based on where you go, the things you look at, the activities you perform in,
conversations you're having.
So it's just so important, like demographics and all that, looking at all that, your buying habits becomes how you're marketed to. So I think organizations that pay attention to that over time, you can see them to be consistent in being able to hit the point they want to hit. And the other bit I was going to mention earlier also was around, when you say you're casting your net, then you have a fish finder. So we cheat in the US where we can have a fish finder to let you know where there's a cluster of fish while you're fishing. So it's the same thing with marketing. That, there are certain types of people with disposable income that have that money to spend and they have certain likes and dislikes. They live in certain neighborhoods, they have kids of certain ages, and you build a solution that is specific to them, So that would be the value of a fish finder as regards just casting the net. The fish finder takes you to where the fishes are.
Where the fish, the kind of fish you're looking for, at this point. All right, so looking at some of the, listed companies now, we see the likes of FBN Holdings, spending about 32 billion, on marketing and ads and all of that. Guinness, they spend about 20 billion. And for the data also shows the spend has been increasing since 2021, 2022, 2023. And I'm sure 2024 might even be higher, at this point. So these companies, they have the cash, they're ready to spend. But how should they tailor that spending in 2025?
So yes, marketing is getting more expensive. It's more expensive to buy attention on media now, generally, whether digital media or traditional media, it's more expensive. And of course, as with other, should I say, aspects of business or trade, cost is going in the direction of inflation, and all of that. So that's natural, right? But even at that, because of the types of, the kind of, should I say, audience targeting, the kind of specificity you can get with digital marketing, it's more expensive now more than ever to advertise correctly on Meta, on some of the digital platforms, because of what they can deliver to you. So cost per click, customer acquisition cost is rising, right? Again, depending on the type of business and the average, say, order value or average spend, the more expensive your product is, or the more high value your product is, the higher the cost to acquire the customer that will buy that product. That is just it. What I will spend in advertising to attract.
So that's why when I look at some of those numbers, for their results, I see, the cost of sales.
Yes.
That's going up.
Correct. So for a lot of businesses, marketing takes between 20 to 30% of the revenue generated. It's a subset. So when you look at unit economics of these businesses, you need to, if you are aiming for 100 million naira or dollars in revenue, you should budget 30 million for marketing to get that. Rule of thumb, right? Rule of thumb. And then, of course, you have operating expenses as well, which takes up a chunk of that, and then you have your profit margin. So depending on your type of business and the kind of channels, let's use a Rolls-Royce example. What it will cost to acquire a Rolls-Royce customer is way more than what it will cost to acquire, say, a more mass market brand. Because we are talking curated events, special lifestyle type golf outings.
Right.
All expenses paid trip. We just want to show you the factory. All expenses paid. We will come, airlift you, take you to the factory. Imagine what that experience will cost Rolls-Royce. But they know that if we're able to close this sale, our problems are over, right? So the more expensive, quote and unquote, your product is, or the more high value your product is, the more expensive it is. These businesses are spending that budget. First, because they are acquiring customers across different strata. You talked about FBN Holdings. You know, they have investment products, right, that only show up on certain types of media. It's not a mass market product. And then you have the mass market, you know, type accounts. You know, you come open your savings account, current accounts. The marketing budget also includes PR. Public relations is a very important part of marketing that a lot of businesses ignore. Public relations helps with brand building, top of mind awareness. A lot of, and I'll let Roland comment on this, a lot of organizational leaders, CEOs who don't have a marketing background, find it hard to understand why the marketing budget is that much. For what? Because they will say, so how much per dollar, how much am I getting? It doesn't always work like that. There's some marketing spend that, quote and unquote, you throw in the air for top of mind awareness so that you remain in people's minds. When MTN throws out a huge budget just to put lampposts everywhere, pays huge influencers just so that we can all be singing their songs. GT Bank, for example, is good at it. 737, quick credit. There are songs that stay in our head.
Yeah, you can't get it out of your head.
They just stick. Top of mind awareness, very important. Right. And I'll let Roland comment a bit on it because that's a conversation we have often with CEOs who don't understand why is this budget this way, you know? Why, you know?
Absolutely. I mean, as a business owner and from a marketing background, you know, so you would see, we would hire account executives, business development manager. You will rarely ever say marketing or sales because it means you have to put money on it. And a lot of times, and it doesn't even have to be the big organizations. In Nigeria, for example, we probably have more business around the small business enterprise level. And in that space as well, marketing is essential. So, like she said, 30%. I would even be fair to I'll come down to maybe between 10 and 30%. Okay. So, but to the extent that a significant portion of what will hurt you is put aside to create an awareness for who you are. I need to show you that I'm here. I need to show you that I've created something that is for you, that is here. And part of that is consistent. So even when you put a product out there, the minute that is out there, the next product is coming up. So that consistency in being out there is important. And then talking about cost as well. Not only do you have to pay for the reach, when you think about social media, you pay for the reach. It's not just on being on Facebook or on Instagram. You are there, but then you're going to boost. And when you boost, you're boosting based on what type of audience, what type of reach, what type of number, you know. So all those matter as regards how much money you're spending. And then when you now get onto SEO, you know, it's about the keywords. You know, how much money do you want to spend to create that prevalence and that awareness of brand? So the more you spend, the more prevalent your words are, you know, and stuff like that. And then also when you're talking about PR, or the influencers that you're hiring, you know, Davido won't come at the same price as Roland.
Yeah, true.
You know what I'm saying? So, but then your reach, you know, however way you want to be, would matter. You know, would be important as to how much money you're putting out there to promote yourself and to create that gap between your competitors. The other bit of it also that is so important now is the digital divide. The gap between us and everywhere else is so small now. The products are actually filtering in here now that you no longer have to just worry about competing with local products, but international products as well.
Right, true.
You know, so it's quite important that you're putting your money where your mouth is. So in that way, people can actually get to see you where you belong, and then you're able to attract the right types of people that you need for your business.
So I guess it's official, the spend will go up in 2025.
Oh, absolutely. Things cost more.
Right.
And the reach you want also requires a little bit of a spend to get to where you need to get, where you need to get to.
Right. So definitely we'll be watching out, you know, and watching out for all those jingles that you try to stay in your head.
Yes.
You know, so you remember some of these brands. It was great having you both. Olajumoke Abiodun, CEO, Market Edge Advisory, and Roland Morishemi is the Director, Market Edge Advisory. Thank you both for coming out.
Thank you so much.
Thank you.
All right, we'll take a break now. When we come back, we'll head straight to the markets. Remember, I said some markets are badly bruised today. We'll find out. That's in a moment. Just stay with us. All right, it's time to head to the markets now, find out what's playing out. We've seen the jitters, you know, tariff jitters, you know, spreading, you know, through most of the markets that we track. Even with Bitcoin there falling below $90,000. That's the low we've not seen for a while now. We're also seeing in the U.S. Most of the pre-market action. We're also seeing that telling a story on what's playing out with most of the tariff issues right there. So that's the issue right now. Investors are worried on what's going to happen with most of these tariffs coming out from the U.S. There's also geopolitics at this time. So it's a different story for the local boss. Started off this week kind of slow, but we might see a pickup. That happened in the previous, I think the previous trading week. The first trading day started off quite slow. Then from nowhere, we saw that big bump there coming for the local boss. But Aniete is going to give us the details. I guess at this point, it's a welcome back. Aniete has not been here since, I think, what was the all-share index when you left us? Was it below 100,000?
I think thank you so much. I was glad to be back from that
Hope you enjoyed your vacation.
Honestly, I enjoyed my vacation, but I still love my job, which is why I came back to it to do.
Yeah,
what I
love it so much. You love reporting those markets.
Exactly. So you said something about the market. I think I left the market when it was just about some 102,000 points, which of course was still a low when you take a look at the current level, which it was yesterday, which was about 108,000. But at intraday, it fell to about 107,000, which will see that number on your board.
Yeah, new highs. We've been hitting new highs for the local boss.
But then it's also a pullback. We saw about a 0.34% pullback, which is translated in value terms to local currency, 234 billion naira, which was lost by the close of Monday's trading session. As you can see here, we saw at intraday 0.15% pullback, and like I mentioned, 107,960.56. So, Ladi, let's talk more about the market, and to our viewers all around the world, this is Nigeria's stock market, which we always start first. Charity begins at home, 107,960.56, which we saw that market. The last number print that we saw was 108,126.97. That was for the close of Monday's trading session. But for Tuesday intraday numbers, we see lots of the impact of profit taken by some investors. And also, we had over the news that the SEC had reduced the capital markets approval time as a process from over a year to about 14 days. So we'll see how that comes in. That's for the offers for companies that want to raise capital from the Nigerian stock market. But as far as investment profit taking is concerned, this is how the market turned out for intraday. For the Johannesburg Stock Exchange, 0.43% intraday gain, 87,799.63 for that market, Nigeria's closest rival in terms of economy and other factors. Now, let's take a look at the other indexes on the African continent. EGX 30, 0.94% intraday, down 30,635.16. And for the close of Monday's trading session, the Nairobi Stock Exchange All-Share Index, down up by 0.34%, 133.26. So that's a snapshot of the markets, major markets across the African continent. But now we're still staying on the Nigerian financial market. And this time we're talking about the fixed income market, where yesterday we saw, first of all, we saw the February FGM bond, where the government intends to raise about 350 billion naira from the fixed income market, as particularly that's for the bonds market. But talking about the fixed income market, we saw some mixed sentiment there. Overnight lending rate is expanded by 7 basis points to 32.9%. That's amidst the inflow of about 818.7 billion naira from the FGM bond coupon payments. And then we also saw the treasury bills market on a bullish note. Average yield there, it contracted by 21 basis points to 20%, while the proceedings in the bonds market was bearish as the average yield increased by 5 basis points to 19.4%. Now let's talk more about the FGM bond auction, which I mentioned, and we have to give us details about that. Nonso Ifejiofor, as a fixed income dealer with Access Bank, to give us details of the outcome. But I think I don't think Nonso is ready to give us that details for now. But once we have him, he would give us a breakdown of the results of that FGM bond auction. This is the final week of February, so that's a bond market auction, which is carried out by the federal government. We'll be having details of that transaction and how it affected the fixed income market. So now let's move over to the Middle Eastern markets. For the Middle East stock market, we see the market, the indexes, they were kind of like a little bit mixed. We saw the Dubai index 0.11% down, 5,329.01. The Abu Dhabi index, which is also on the United Arab Emirates, up by a tad, 0.04%, at just about almost the last track there was 9,599.01 for the market on the Abu Dhabi index. And for the Saudi Arabia and the Qatari Stock Exchange, we see the market in the red, 0.33% for the Saudi Arabia's stock market. We see some, one of the country's mills is being listed on the Tadawul there, but that impact is not being felt because at intraday the market is still in the red, while the Qatari Stock Exchange is down by 0.7% in the midst of falling oil prices, as well as some company earnings which are not also having a good print on the market. So that's also a snapshot for the markets on the Middle East region, across the Middle East region. So now let's move from the Middle East and fly over to the United States, where we see that the market, the regional markets there, markets across the U.S. for the stock futures ahead of the opening bell was mostly in the red. Overnight, it was also mostly in the red, except for the Dow Jones Industrial Average. But for the stock futures ahead of the opening, that's early today, we saw the Dow Jones Industrial Average 43,495.00. By a tad there, most of them in the flat line. The S&P 500, 0.30%, 5,982.75, while the NASDAQ was down by 0.52%. So, but we'll continue with the U.S. market as far as the futures are concerned, to give you more details of what to expect from the world's biggest economy. But like I mentioned earlier, that we were talking about the markets for the Nigerian market for the FGM bond auction. So now for the FGM bond auction, we have Nonso Ifejiofor, fixed income dealer at Access Bank, to give us details about that. That's 350 billion naira which the government intends to raise. So what was the outcome? Nonso, thank you for joining us first on the show. Now, can you give us a breakdown? What is the result? How did investors react to that FGM bond auction? And how is the yield environment? How's it reacting at intraday?
Okay, thank you for having me. I will start from what transpired last week. If you recall, we had the bond calendar, which had scheduled the bond auction for yesterday. However, as at Friday, we saw the DMO come to the markets to notify participants that one of the maturities that was going to be on issue would no longer be offered at the auction, and that was the 35. So they reduced the amount from 600 billion as at Friday for the auction on Monday to 350 billion, where they had offered 200 billion on the 29th and 150 billion on the 31s. For the auction, what we had seen was an overwhelming subscription. We had seen a subscription of 1.1 trillion on the 31s and about 465 billion on the 29th, bringing this on the 29th, bringing this subscription level to about 1.6 trillion. At the auction, what had transpired was that the DMO sold 910 billion. That was 605 billion on the 31s and 305 billion on the 29s. We had seen the rate close at 19.33% on the 31s and 19.2% on the 21. After the auction, we had seen the rates begin to decline by 10 to 20 basis points, where we've seen trades being consummated on the 19.10 to 19.20 handle for today. What we expect from the markets is that with regards to the system liquidity, which we've seen that has been in the red region since last week, we hope that the OMO maturity for today is about 1 trillion. We come in to cushion the effect of the about 800 billion negative which is in the system, and we'll also be expecting the settlement of the auction for tomorrow. That is about 900 billion. This would most likely send the market back into the red region, that's the negative region. However, we are expecting the FAC inflow to come in. With the FAC inflow, we can expect liquidity in the market and expect that we'll begin to see more activities in the fixed income space. Thank you.
Okay, so a final one, just in a few seconds before I let you go. We know that the bond issuance, it aligns with the government's broader strategy of raising capital to finance many of the national projects while providing investors with a stable and secure investment opportunity. But what is the implication of this latest bond auction being carried out by the Debt Management Office?
So the implication of this is that we had seen subscription at a very high level. It shows that the market is still open to get these papers. They still consider it as an attractive means of return. And for the government, we saw an increase from the budget from 49 trillion to about 54 trillion. And that means there will still be a deficit to fund. With that in mind, market participants are already positioning, and the expectation is that we see the DMO continue to come to the market. The next bond auction will be on the 24th of next month. We also expect from the NTB calendar, we also expect that there will be an NTB auction by next week. What all this goes further to show is that the government would continue to get funds from the market in order to be able to meet our obligations and also to meet its promises to the masses.
Okay, so thank you so much for your analysis, and I think we'll leave it there, and of course look out for how the market closes to this trading session. Thank you so much.
Thank you.
That was Nonso Ifejo for fixed income dealer with Access Bank, giving us details about the bond market as well as other fixed income market activities for intraday. Okay, now we're talking about the U.S. market, where we stopped last at the NASDAQ there. You saw that the NASDAQ was down by 0.52%. But in terms of what to expect on the market, first we know that NVIDIA, which is what you call the AI darling, which is one of the most talked about stock on the U.S. market, is expected to release its earnings, which is expected on Wednesday. So that would also dictate what side that the market would tilt, particularly for the NASDAQ, which you also mentioned there. And we also saw that the market is being impacted by Trump's tariff threat announcement, which on the countries like Mexico and Canada, and that of course has riveted many of the major markets. So, but on the economic front, investors will be turning their attention to the latest consumer confidence data out of the world's biggest economy, which is will be due out 10 a.m. Eastern time, and then the personal consumption expenditure index, which is the U.S. Fed's preferred inflation gauge, which will be out on Friday, as well as some other market reports. So, Ladi, that's a nutshell for major markets around the world.
So much playing out to the markets. We'll definitely see if there's some kind of reprieve, coming for most of the hammered markets. Thank you so much, Nathan, for giving us the details for those markets. And welcome back again.
Thank you so much, Ladi.
All right, now.
And I love to give my market information as juicy as it
Fantastic, very juicy. All right, let's go to Europe now. As talks begin forming the next ruling coalition here in Germany, let's take a look at Germany's most popular industry, that's the car industry. New data shows that in January, many in the European Union chose to buy hybrid cars over EVs, a big change from this same time last year. The incoming German government will most likely relax some of the strict rules implemented on this industry. But for more now, we have Vada Imreiter joining us from Berlin. Great to have you, Vada.
Great to be here. Thanks, Laddie.
All right, let's start with the numbers now. What is the new data? What is that telling us?
Well, the latest numbers show that new battery electric vehicle sales were up 34% in January 2025 and captured a 15% market share. And much of this share was in Germany, Belgium, and Netherlands. Hybrid EVs remain the favorite for many here. In the same report, it says that petrol car registrations fell by 18.9%, with major European markets showing decreases. The biggest dips were in France and Germany. Now, if you look at what European citizens are buying, it's interesting. Volkswagen EV sales were up almost 15% from this time last year. Italian Alfa Romeo grew their sales by over 22%. And quite a notable jump was Chinese automaker SAIC Motors, 76.5% growth from basically 9,000 EVs sold last year to 17,000 EVs sold in January this year all over the EU. And all this data is obviously from the European Automobile Manufacturers Association. And what this shows is a preference for Chinese automakers, and other big names like Toyota saw a dip, and so did legacy names like Fiat and Opel. And in the EU, Tesla sales declined by over 50%.
All right, so car maker Tesla, they once dominated these numbers. What's happening?
Yeah, I mean, a year ago, many here said they would never switch out their Tesla for anything else. This company had a really good reputation. They have very fast charging infrastructure here in Germany and all over Europe. But I think there's a lot of factors people think about before buying a car here. I think many are really conscious to think about who is behind the company. And I think the recent US elections and Elon Musk's role in it really changed people's perspective. And then his support for right-wing parties in Europe fueled this discontent. Political blowback has damaged Tesla's reputation here in Europe, and these numbers are the lowest they have been in 2 years. Sales in France and Germany have declined massively, and its savvy Chinese competitor BYD is gaining from this. Polls conducted by online service YouGov in Germany showed that Musk was viewed quite unfavorably by a majority of the people interviewed. The company has also been making changes to their assembly lines, which could have impacted the sales as well.
All right, what's playing out in the markets in Europe?
Well, Laddie, investors here were waiting for German economy data of Q4 of 2024. And it's out, so it's official that the German economy shrank by 0.2% in the last quarter, continuing its downward trend. Exports were down considerably, with a fall of 2.2% compared to last quarter, so Q3 of 2024. Focus was also shifted to the German central bank numbers, which took a loss for the first time in 2024, for the first time in 45 years. The bank lost around 19 billion euros and said that rapid changes in the Eurozone interest rate policy depleted reserves. There's a possible special fund being set up for defense here in Germany. There's no confirmation yet, but it seems that the CDU wants to table a 200 billion euro emergency fund with the SPD. And speaking of that, and on that news, defense stocks were leading in the DAX early this morning. Rheinmetall, Germany's biggest arms producer, was up 2.8% this morning, followed closely by cement maker Heidelberg Materials. But more recently, pharmaceutical company Bayer is also continuing its upward trajectory at 2.4%. The DAX is also enjoying a good day, even though the election euphoria is dwindling, and the index did open in the morning briefly red but turned positive. Pan-European stock 600 is also enjoying a high at 0.36%.
All right, Vada, thank you so much for breaking it down for us, what's playing out in Europe. Thank you. Enjoy the day.
Thanks, Laddie.
All right, now let's get a check on what's playing out with some of the domestic commodities right here in Nigeria, and we're going to be focusing on palm oil. At this time, we have Miriam Ode now. She's an analyst with Financial Derivatives Company. Great to have you, Miriam. So we're hearing some, domestic prices, some of these commodities, the prices are tending downward, so far. But what's happening with palm oil?
Good afternoon, Ladi. Thank you for having me. So yes, right now, palm oil for a 5-liter keg is going for about 12,000 naira. And this is actually elevated from what it was last month, which was about 9,500. And the reason why we're seeing this increase is basically because palm oil is a seasonal commodity, and we usually see its price peak in December. But now we're still seeing the lingering effect of the seasonality, and that's why prices are still elevated. And probably until mid-April, when its harvest season begins and supply improves, we would see the increased supply weigh on the domestic price of palm oil. But there's also the fact that the agricultural industry in Nigeria is plagued with climate-induced challenges, which is reducing the yield of palm oil in the country. And for example, in Edo and Akwa Ibom states, which are actually the states that produce top producing states of palm oil in Nigeria, we're seeing that temperatures have remained above the optimal temperature, which is 32 degrees Celsius. And as of today, we're seeing that the temperature in Edo State is about 35 degrees Celsius. So this, the hot weather is affecting the production of palm oil, and we're seeing lower palm oil production in the country, which would obviously push up the price of the domestic commodity. But
what's happening in the global palm oil market? Are we seeing rises, as a rising price there too, and maybe that's seeping into the country?
In the global space, interestingly, Indonesia, which is actually the world's largest producer of palm oil, has just recently placed a ban on used cooking oil. And you might think, how does this relate to palm oil prices? But then producers of biodiesel actually use used cooking oil, in palm oil included, used cooking palm oil included, as a substitute for virgin palm oil in the production of this biodiesel. And now that Indonesia has cut off or banned its export of the used cooking oil, we see that the supply in the global market has reduced, and this is obviously going to force producers of biodiesel to switch their demand back towards the use of virgin palm oil. And what we're going to see is that because of this shift, the price of palm oil is going to increase. And let's not even forget that Malaysia, which is the second largest producer of palm oil, is expecting lower production levels this year because of increased rainfall in the region. So these factors combined together would actually keep palm oil prices high, because currently they are elevated.
Right. Thank you so much. We'll keep tracking those prices. That was Miriam Ode, analyst at Financial Derivatives Company. Thank you.
Thank you so much for having me.
All right, let's quickly now get a check on what's playing out in the crypto market. That market is badly bruised today. If you're looking at Bitcoin, the color, that should be red, deep red. If you're looking at Coin 360 right there, it's just little pockets of green, and those pockets of green, they are mostly stable coins. I'm showing how investors are feeling right now. They're trying to run into safety, but there are a couple of cryptocurrencies not doing too badly, like Phantom and the rest. And we see Bitcoin there dropping below $90,000. The last time we saw this price, that was a while back, and a critical level. If you look at the headlines in the market now, the critical level most investors were watching for, that was $95,000. So I guess most of the longs have been destroyed today. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide.
Hello, Ladi. Good afternoon.
Good afternoon, Olumide. It's red on the streets right now. That's the crypto streets. And do you think investors are just overreacting? They're saying it's the tariff jitters at this point. Is that it, really?
I think it's part of it. After Donald Trump in his press conference with the French President Macron highlighted the fact that tariffs were still in play between the Mexican, the Canadians, and the United States. That inflated the market. And before that, the Buy Beat Act really weakened the ecosystem in terms of buying appetite. Also, news that FTX was going to unlock millions of Solana on Saturday, March 1st, also weakened interest in the meme space. You know, Solana plays a key role in the meme market. So we're seeing Bitcoin dropping below 87,000. Last time we saw that level was slightly immediately Donald Trump won the election. That was November. And if you look at Ethereum price action, it tells you that it has broken below 2,500. You look at the meme space, it's almost like a disaster. Most popular coins have lost at least half of their value. The Dodge and look at Shiba Inu this quarter. It gets worse when you look at the DEX enabled coins. So, Ladi, the level of greed and fear index is at the highest level since we saw in September. That tells you that investors are really, really very cautious about this asset class. And I think when the Americans wake up some hours later, we might see the worst, because it looks like Bitcoin really wants to test the 85,000 support level.
Right, Olumide, you're right. It's extreme fear right now. I've not seen that level in a while in this market. This market has been quite greedy, for the longest time. So I'm sure the value of longs that have been liquidated, that'll be a lot of money. Definitely. Right now. Yeah.
Liquidation now stands about 1.3 billion. And you look at long liquidation is about 1.1 billion. Most of the liquidation happened on Binance, Bybit. Many players are arguing the fact that crypto exchanges play a role in manipulation, and the fact that there were a lot of coins moved between these central exchanges to market makers. So, the debate still on how centralized the crypto market is and why we still need a regulator, based on the fact that a lot of players feel that they've been cheated out.
All right, definitely. We keep watching to see if there's some kind of a bounce at some point with the market. But right now, I'm sure there's a lot of fear going by the Fear Greed Index. Thank you so much, Olumide Adesina, financial market analyst. Thank you.
Thank you for having me, Ladi.
Yeah, so there you have it. It's extreme fear, 25 points in the market now. Investors in the crypto space are fearful, and definitely that happens when you see huge price changes like this. And when we're talking about longs earlier, we're talking about those people, those investors or those traders that expected that Bitcoin would go up, so they bet in that direction, but it's down now, so they've lost money at this point. But that's the show today. Thank you so much for watching. We'll catch you again tomorrow, bringing you more details of what's playing out in this market. From me and the team right here at Channels HQ, it's bye for now.